I hate you, Joey. Good afternoon, everyone, and welcome to Trending Thursday. My name is Glenn, senior instructor here at VectorVest. Glad to have you here. Glad to be here. Let me turn this down a little bit. Oh, man, a lot of stuff going on in the market. The Fed came on and talked about some stuff, and the market started to react. It looks like the Fed still does Fed talk. Says, yeah, inflation's too high, but we're going to pause still. That's almost what it's like. Good afternoon, Carol. If you can hear me, by all means, please respond in the affirmative, preferably with VV Nation, and let me know that I am coming across loud and clear. Bill says, do you feel that additional rate hikes will further cause bond rates to continue to skyrocket? And the answer to that is walking the tightrope of what's going on. Yes, I still think that bond rates or bonds yields will go up. But if we know that the inflation is a problem, and the way you were going after the problem was raising interest rates, then why do you stop? And as you pause and you watch inflation becomes a bigger problem, then what? Then what? All right, so it's great to see your smiling face, Glenn. Thank you, Bill. I appreciate that. So that's all I got to say in regards to that. I honestly think that you don't continue to pause. A lot of people think he's done for the year. I don't know if he's done for the year, but you know something? I'm tired of trying to guess at it. And even though he's paused for 2 consecutive times, what's the market doing? So a lot of people feel that, well, with the pause, the market should take off. It ain't. It's not. So what do? And there's the tightrope. A lot of people saying now, if you keep raising the interest rates, the banks can't handle it. The banks are already kind of screwed. I just showed you a story not too long ago that Bank of America unrealized losses are huge. Just think about it. If it's for Bank of America, what do you think is going on with the regional banks who are not reporting their losses yet? We're in a not good state. Do we get out of this? Yes. I still think we're America. We still get out of it. But we're not in a good place economically after we put so much money into people's pockets. I saw a story that people's personal wealth was up 37% during COVID times. Personal wealth was up with all of the money that was going into their pockets. That's a big number. I don't know how substantiated it is. Again, it was a headline. I just saw the headline and it's like, wow. Now what's going on? Well, now we're not infusing the economy with all this extra money. People are spending up on their credit cards. Credit card payments are going up because of interest rates. People are going to start reneging on that. That's one of my bubbles. So I think that as we watch this market, and even with the Fed not raising interest rates, or the chances are very high that he won't raise interest rates, it's not enough. We got a whole lot of geopolitical stuff going on that's going to affect the market adversely, especially when it comes down to oil. Oil is an indicator of inflation. It's going to rise. Iran's going to put their hands in it. Not to say that their hands are not already in this, but they're going to officially put their hands in this. Once an oil producing country does get involved, oil is going to go up because people are going to be scared about what could possibly happen with oil. So I look at a lot of different things. Glenn, what do you think inflation rate base would be going forward future? I don't see it coming back to 2. I think that 2% was extremely aggressive. They came out of the gate like, yeah, we're gonna get down to that. They're backing off. I don't think they're going to get to 2%. And the Fed saying that the bond rates are taking the place of the increases in inflation in interest rates. We'll see. All right. So with all of that, thank you, Nat. Nat says VV has been on point. We're still trying. This is a tough market to make out, but we're trying to keep our subscribers on the right side of the market at all time. I got a lot to talk about today, but I do have a special guest today that I'm going to bring on now. And then we're going to get back. You got to stay with us. We're going to get back. I got a lot of stuff on my chest when it comes down to what the Fed says and some earnings stuff and other things that are affecting the market. But I think that my guest that's going to come on today is ideally suited for what's currently going on in the market. When we talk about the market's, ambiguity of which way it's going to go, and da-da-da-da. So we're going to bring on Ron Wheeler, and he's got a course that shows you how to conservatively, I'm going to say conservatively, shows you how to conservatively make 3% a year. What does that come out to? 3% a month. 3% a month comes out to 36% a year. That's an astounding number given the current market's conditions. So with that, I'm going to bring Ron Wheeler on, who's going to talk about the options paycheck experience. Hi, Ron. How you doing, buddy? You're muted.
There we go. Now I'm muted. I'm sorry. My 3-year-old daughter, or 4-year-old daughter, came to my office. I'm like, no, now's not the time.
All right, so Ron, you got something called the Options Paycheck Experience, which kicked off yesterday as a webcast. You have another webcast today. Again, by the way, these webcasts are absolutely free. Ain't nobody selling you a ticket to get to the webcast. They're absolutely free. And talk to the people, talk to VV Nation about it a little bit.
So what we do is we do what's called income trading, and income trading is simply this. We look for trades and we design them with options in a way that you should have a statistical 60% or better probability of success. Because what we do is we sell options that allow you, if you think a stock will go down, or I trade the S&P 500 a lot, if you think the S&P 500 or the stocks will go down, we can pick a price where it says, as long as it stays under this price, we can make money. So for example, I'm looking at my other screen right now, so if you can see my head moving, it's okay. For instance, I got into a trade on Monday that hit profits today, and we sold, right now the S&P is, I think, at like 4306. We sold a 4455 call on the SPX. Now that means that we have room for the market to go down, sideways, up a little bit, and it gives us more probability to see profits. And that's why we can help generate that type of return with that type of statistical probability. It's not because we have some magical indicator. It's all about math and statistics and how we use options to place these trades where the market's not likely to go. So that's what the options paycheck experience is all about. And then also, I'm going to give you guys a little heads up. I'm doing the strategy of the week this week, and I'm going to talk about things I like to call the layers of probability, right? As our founder, Dr. Toledo, always said, everything falls from the market direction. So I'm going to put together a presentation about this type of trading that talks about how we can continuously add probability to our trades, market direction, good stock selection, the option strategies that I use. So it all builds into how we can produce those types of results. We layer and layer and layer probability. Market direction, good stock selection, an option trade that has good probability, taking profits at the right time, limiting your losses by getting out at the right time. That's really what the options paycheck experience is all about.
All right, so there we go. And Joey's going to put the page up. We've got a free live online workshop. It's entitled How to Generate 3% per month with one option trade per week. Does that appeal to anybody out there? Type a 1 in the room. And if if that's not your thing, type a 2. But does that appeal to anyone in the room? Type a 1. 3% a month with one options trade per week. I think that, again, 3 times 12 is what? 36. That's 36% annualized over the year. And Ron will be the first to tell you that some months would be better than other months. Some months will be worse than other months. But a general basis of 36% a year, we're doing one option trade per week. Folks, this is a free webcast. As you can see here, it is at 4:30 today. Talks about the major mindset shift, 3 biggest mistakes, how to trade with very little risk, and the bulletproof 5-step system. This is what's going to be covered in today's webcast. An absolutely free webcast. Joey put the link in there. It's tagged at the top of the page, www.vectorvest.com/OP register. All right, go take a listen. If this sounds good to you, the webcast is free. Ron is real good at what he does, and I love having him on as a special guest. But I think when you look at the current market's conditions, I don't think there's anybody out there who's not looking to make, pretty stable 36% a year. That's definitely better than what the S&P 500 does. All right. So, I know this strategy. I know selling spreads and buying. So I did see somebody said that they just finished the option. What is it? Who said it? Somebody said it. Options trade. One options trade. It's per week, Zillan. Per week. Someone said they just went through. There it is. Kevin says, I just finished the option paycheck experience. Kevin, how did you like it? How did you like it? Bob.
And be honest.
Go ahead. Say it again, Ron.
I said, be honest. I always like good feedback, bad feedback. I like it all because I like to make things better.
It doesn't matter where the market goes, you make money. Is that pretty much Ron will take you through the up markets, take you through the down markets, take you through the sideways markets. That's the beautiful thing about this experience, this options paycheck experience. So it needs work, says Skyper. I don't know if everybody in this room would agree with you, but Ron is right. It's your opinion, and that's fine. I think I don't know where it needs work at, and maybe that's something you take offline with Ron if Ron gives you that opportunity to speak to you.
Yeah, you still have the email address from the class, the options paycheck. So shoot me an email. Like I said, I'm always looking for feedback, and I always like to make changes. The paycheck experience today is not the same as it was, 7 years ago when I first started, because I like to make changes based on customer feedback. So please, by all means, let me know so I can make it better.
Kevin says, I'm not 1 month. I have already earned enough to pay the class plus.
Nice.
Wow. Yang Nish says, I am Condor and selling and buy spreads. You make limited amount of money. And, something with, and a lot of people don't really understand that in option trading, options are a lot less riskier than stocks because, there's a lot of time as a sell, you are limited to what you make, but you're coming out ahead of the game, making money rather than putting yourself on the probability of losing money. John says, I understand simple options. I can't seem to grasp option spreads. I tried and I'm still confused. John, try going to the free webcast today. Maybe Ron will see you that you were here, and if he can, try to break it down a little more if he can.
There's one section in the class today, and then we're also doing 3 more of them next week, by the way. So there's one section in particular where I try to break down, what the purpose of a spread is and how we do it. So it might be a good thing for you to watch that part. It's definitely some good free education that you can learn from.
All right. 3% a month, that's Joe to 1 per. How do you get 3% a month to 100% in a year? That number don't match up. That don't match up. Peter says, I took the course months ago. I do the SPX. I start out with 1 per week. Now I'm up to 13 trades per week. Please do not tell Ron this. He does not promote. He does not promote this amount. That's all right. Ron sees it, Peter. It's not like he can't see it. He can see it. But listen, whatever works for you, Ron sets the groundwork for it. So accumulating 100% in a year, says Niels. Again, I'm looking at just the basic numbers. Comes out to about 36% a year. All right. Ron, I got a lot of other stuff to cover today. I want to make sure that they get there. If you go to his webcast today, his free webcast today, when you come in, I want you to go type in VV Nation TT for Trending Thursday. That way Ron will know that you guys came from Trending Thursday. So when you sign into the room, I want you to go with VVTT. All right, for VVNTT, VectorVest Nation, VV Nation TT. You guys got it? Yes or no? You should have gotten that. VVNTT. And that way Ron can give y'all a special shout out for coming to his class today, coming to his free class today, knowing that you came from Trending Thursday. All right? So you're an investor in increasing amount. I know Niels, that's over time. But the basic math is 36% a year. That's the basic math. In the accumulating part of it, you can do a lot better than 36% a year. But I think Niels, that a lot of people would be very happy with being able to sustainably generate 36% a year. That ain't nothing to sneeze at. And that's the purpose of the Options Paycheck course. One last thing. Kevin says, my first bear call spread netted the price of the class. Take the class, but also at least sign up to listen to the free class today. All right, so there you go. Ron, thank you again for being here, taking the time out of your day. You do a lot of stuff. You and Todd do a lot of webcasts. Good gravy.
We do.
All right, so
but we love it.
But I look at that. Peter said registered. Way to go, Peter. Thank you for doing that. Thank you for doing that. All right, Ron, have a great day, my friend. Hopefully we get a lot of people from VV Nation Trending Thursday show up to your class today.
I'll let you know. Thank you, Glenn, for having me on.
All right, so that was my special guest. Make sure you hit the like button. Ron's got busy days every day. He's got a busy day every day, and I'm glad that he was able to share some of that time with Trending Thursday today. All right. So Jake says, hello, Boston is here. Hey, Ron, Mark, man, I got all that stuff. I finally opened up the box. It's been sitting in my office for the last couple of days. I've been so busy I hadn't opened up the box. But man, we got some goodies. Ooh-wee. So thank you for that very much. I want to say thank you for much. Goodness gracious. Thank you very, very much. So we got cookies and candy for Halloween. So what's up, Nectarios? You came into the office. How did I try to hide anything from you, Boston? Listen, don't even try to go there. There was no reason for me to hide any of it. All right, don't give falsehoods. All right, don't give falsehoods. I ain't try to hide anything at all. I had it for 2 days. I didn't hide it. I've been busy. Unlike evidently you, I've been busy. So that's all I got to say about that. I'm getting off of that. You're not dragging me down anything that I don't need to go. All right, looking at what's going on in the market. We got now 2 red lights in today's color guard, both on the price and on the RT. Primary wave is still down. All right. And man, interesting as I look at what's going on in the market's still looking for a bottom where we look at the MTI and the buy to sell ratio. The market's still looking for a bottom. Let me get this up over here so I can see it. Market's still looking for a bottom. Primary wave is down. A lot of yellow lights. I still think that the market's at a level where it's still looking for a bottom, but the problem is, when is it going to start rising up? That's the problem. All right, and as I bring up the market timing graph, you know, we had a little bit of a reprieve. The Fed came out and was saying to the mindset of, you know, maybe we don't raise. All right, maybe we don't raise. And the market said, yay! I had a little bit of a hammer forming. Look at now, as we're on, the market's pulling back. I've got still to the point of about the price of, here we go, 53.75, 53.72. We're at $55. We've got more downside, which is the distance between the head of the Head and Shoulders and the neckline. And that tracking that distance all the way down gives us a price of 53.72 on the VectorVest composite. We still have more downside. What's going to help me to see if we're getting closer to that downside? I've got a level of support right here, currently at 54.87. If we fall through that, higher probability that we will hit this level of support down here. All right, now, as that's going on, The MTI and buy to sell ratio will keep getting lower and lower and lower. The lower they go, the more explosive an upturn will be. Look at this. The last time we got to that level of where we are, a couple of times, nice big move to the upside, smaller move to the upside. And those 2 times were the last 2 times that we were down in that level. All right, down in that level. And I can't call it. And I'm trying to be realistic in the move. We had a little bit of a wedge, small wedge. We broke to the downside of the wedge. I've been saying I think that the market's got more downside. And every time I say that, the market tries to give me a little bit of the jitters and move up higher. But here's where we stand. The market's moving down. Why is the market moving down? Let's go to some stories that are affecting the market. This is big for me. All right, these are the things that I've got on my chest, especially when it comes down to Powell. Powell says inflation still too high. That in and of itself says that it's a problem. And lower economic growth is likely needed to bring it down. Lower economic growth. People are working. People are spending money. And again, albeit it may be on credit cards, they're spending money. Lower economic growth. It's telling me that he knows that the economy is growing faster than he would like it to. Is the economy slowing down? Yes. But is it growing? Is it still vibrant? I'm not going to call it vibrant, but it's still stronger than he would like it to be. Talking about that, weekly jobs claims total 198, fewer than expected. More people are working. But we know that the working number is kind of jacked up. A lot of people have pulled out looking for a job, number one. A lot of people are now picking up part-time jobs. Why? Because if I'm hiring you part-time, I have to spend less money. I don't have to give you benefits. So I still have you as an employer, as an employee, but I don't have to pour into you nearly as much money because I don't have to pay your benefits. And there was a news article that I saw that more people are now working 2 jobs than have been in quite some time. So yeah, I like the jobs number and what it shows, but I also am taking in consideration that the job numbers is skewed. Now, some of the stuff that came out of Jerome Powell's speech today, live coverage, blah, 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 blah. All right. Some of the key moments that came out of it. All right. That he came on about 12 o'clock and the market moved. He was like, yeah, blah, 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 blah. Fiscal path is unsustainable. The U.S. fiscal path is unsustainable. The overall level of the U.S. debt isn't a problem itself, the Federal Reserve problem said Thursday. But when asked about the level of government borrowing relative to the past, the chairman suggested that rapidly rising debt levels can become a problem moving forward. Why is that a problem? Because as he continues to raise interest rates, he's raising the rate of which we have to pay back money. All right. Powell tightening is working, but there's more to do. What else came out of this? Monetary policy is not currently too tight. So you remember that when he started talking about this, that monetary policy he said he was going to hurt the economy. He's going to put some hurt on the economy. The policy is not too tight. Federal Reserve officials generally are data-driven, guided by economic models and the flow of indicators as they land. Chairman Powell said Thursday that he also focuses on looking out of the window. The flying flip is looking out the window. Who wants to look out the window? I don't want to look out the window. I want to get it right. Many Fed officials over the years have noted that they talk to everyday Americans and look at a wider data sets and even quirky indicators. Former Fed Chair Alan Greenspan, for example, told NPR that he monitored sales of men's undergarments to help forecast economic downturns. Where's that at? That's a little creepy. I don't know. Glenn, did you talk about Powell from your office? I didn't call him today. I was gonna call him today, but I changed my mind. I'm not gonna call him today. Looking at the sales of men's undergarments. Okay. Powell meant the interest rates have to be higher and the money printing has to stop. Well, if the interest rates have to be higher, he's not showing that by pausing for 2 sessions in a row. Powell calls attack on Israel horrifying. I'm not going to get into that. Inflation is still too high. That's a problem. And just saying those words and still pausing on interest rates, then, no, I didn't call the Fed. Joey, should I? Nothing to see here. Mark says, move on. Nothing to see here. Wow. Climate protests, I'm not seeing that. And here is, you can download or view the transcript of Jerome Powell's speech today. So those were the key things, some of the key things that Barron pulled out of the speech today. What if you don't wear, oh yeah, VP. Oh yeah, really? Where's that? That's got nothing to do. So we went from looking at men's undergarments to going commando. Just that quick. I don't know how we went that way. I don't know how that just took me. Hey, Joey, should I call Powell today? See what's going on with him? He ain't listening right now. I know Jake says, oh, LNG gross. Chicks dig me because John, stop going down this. Amir says, I need a lot of fish, Glenn. I have to pay my bills after a horrible last 2 weeks. I'll get you some fish. Huh?
You think it'll help?
Do I need a hug?
You think it will help?
If I called him today?
Yeah.
Let me give him a call. On my phone. Let me give him a call. Hello? Hey, what's up, JJ? I saw your speech today. I saw your speech today. What the flying flip is going through your head? I'm just curious. You're going to tell people that, well, inflation's out of hand and it's too high. And then in the other breath, well, we don't have to raise. What are you doing? Hook a brother up, because I'm trying to figure out, what are you doing? I want to know. As I sit back in this office looking out of my window, all right, you want to look out the window? All right, fine. I'm looking out the window. There's my window. What you doing? What you doing? You got to get this right. You got to have a little bit of backbone, and you got to stand up to these people. You got to do what's right. What are you working? Who you work for? You work for the banks. You work for the economy. You work for the people. You got to do what's right. And I think that if you're going to continue to kick the can down the road, what is that going to do? We're going to all lose. Because then when inflation rears its head, what are you going to do? Oh, well, I guess we're going to have to raise rates, and I'm probably going to have to raise it 100 basis points. Is that what you really want to do? You should have done that a long time ago. What? You got to go? I'm not important enough? What? Holy smokes, Jerome Powell hung up on me. Holy smokes, he hung up on me. He had something else that was more important than talking to Glenn. Wow. Okay. Jake says, I hurt his feelings. I just told him the truth. I just told him the truth. Wow. He hung up on me. He said he had something else that was more important. All right. Lauren says, please, no more calls to the Fed chairman. They are completely fictional and not entertaining. I tune into this stream for fact-based information and stock picks, not political opinion. Lauren, 1, I usually don't talk politics. 2, it is entertaining. 3, you're in the minority. If you don't like it, that's up to you. But I don't try to appeal to just one person. I try to appeal to all of VV Nation. So that's what I got to do. All right. So I hear you. And going forward, Lauren, I'm not going to tell you that I'm not going to have calls to the Fed, because I will. I'm going to stand up, because that's what we do on this channel. All right. I'm going to do that. You may not like it. Fine. I'm moving on. All right. Next story. See you, Lauren. Have a great day. All right, next story. Oil jumps as Iran increases rhetoric against Israel. And that was going to be another issue when it comes down to oil. I made mention that as soon as an oil producing country gets involved in this Israeli war, it's going to put a lot of pressure on oil. And I'm going to, I look at it. I've been bullish on oil for the longest time. I still have a couple of oil plays. I think that we'll see. We'll see. I think that when any oil producing country gets involved in this, there's going to be an increasing fear of what could go on with oil. So we'll see. That's on oil. Big banks. Now, this is an interesting story as well. You can't please everyone. I think it's time to make a call to Biden. I'm not going to call Biden. I'm not doing that. All right. Someone throw up a damn on this drum. What are you talking about, Marcus? Yeah. Okay. All right. Anyway, Tony says more funny stuffs, please. I just, you know me. I do what I do. I try to entertain you guys because you know something? I don't want to be all about, well, we got to have a little bit of fun. We always got to try to have a little bit of fun. And that's all I got to do. Glenn, Mr. Power asked to tell you to call next Thursday, same time, Peter says. Okay. All right. So, big banks are quietly cutting thousands of employees and more layoffs are coming. Your Uncle Glenn has been telling you about the other shoe needs to fall with the banks, and it's going to happen. The regional banks, I think that there's more to come to the negative side when it comes down to the regional banks. But big banks are quietly cutting thousands of employees. That's a good way to start to shore up the bottom line if they start cutting on banks, cutting on employees to help the bottom line. Actually, let's go to my list. Where's my list? Viewers, big news. Let's go look at, I put my big bank of choice in here is JP Morgan, but I'm also going to put in the BNKD. I still like that play, which is bearish on the banks. Look at that. It's up today. Look at that by VST in the list. It is the number one VST stock. The bank is the second top VST stock in here. And then I also just talked about oil with a VST of 1.07. But look at that. I still am bearish on the banks. JP Morgan is one of the better banks that are out there. And it's undervalued, fundamentally sound, growing their earnings at a clip of almost 20%. Bank D, BNKD specifically, because overall JP is not the only bank out there. And then it wasn't that, it was US Oil. It's got an RT of 1.26 and another buy recommendation. I still think that oil is going to go up. We have oil issues. Neil, I don't disagree with you. Glenn knows when stuff doesn't work. Ask Professor Profit. Yep. And what did I do with Professor Profit? Took him right off the air. I took him right off the air. Professor Profit didn't work out too. It didn't work out too good. So Professor Profit went right off the air. All right, so those are the three things that the couple of things I just talked about. Banks, again, I'm bearish on banks. JP Morgan is one of the better banks that are out there. And I did talk about oil, up about 1.5% today. All right, let's go to my next story. TSMC beat earnings. So my next stories are pretty much about earnings. All right, how many people saw my video on Tesla before I get there? How many of you saw my video on Tesla type of 1? How many of you did not see my video on Tesla type of 2? I want to do that real quick. How many of you saw my video on Tesla type of 1? How many of you did not type of 2? And one of the things that I did, I was a little nervous doing it because VectorVest doesn't predict. But I did. I predicted. But it wasn't just a prediction on my part. It was using the VectorVest software. I did predict, say, by way of insight, that they were going to miss earnings and miss revenues, and they did. Yesterday, we did a live stream for the call, and the biggest thing that came out of that live stream was that Elon Musk didn't say anything to make people feel warm and fuzzy about what was going on with the stock. Do you agree with that? Yes or no? If you read the transcripts or saw the live stream that we did yesterday, he didn't say a darn thing, not a thing to make anybody. As a matter of fact, he was like, well, everybody's looking for the truck. Everybody's looking for the truck. Guess what, folks? It's going to come out in November. But by the way, it's going to be tough for us to. It was horrible. It was horrible. The numbers were the numbers. There's not much to talk about in regard. The numbers were the numbers. But he really did not do anything to make Tesla investors feel warm and fuzzy all over. And Marcus says, but he talks the truth. I'm for that. Okay, fine. He did talk the truth. Well, in talking the truth, I think the effects are it didn't work out. The investors weren't well impressed. I did take a bearish position on Tesla. I got TSLQ. I'm feeling the rewards for that. I still, don't get me wrong though, I like Tesla long term. But the fight, the war, the pricing war with China was going to hurt the bottom line. He knew it, didn't care, because he was trying to get the cars sold. I don't think he sold nearly as many cars as he thought he would, and that was the issue. All right. TSMC tops estimates but warns weak demand to linger. Netflix blew it out the water. Netflix reported better than expected quarter 3 2023 earnings. Netflix shares jump over 12%. We did get a twofer last night because we talked about Netflix also on that live stream last night. And I showed you on a VectorVest graph where I would have been a little bit more bullish on Netflix, where I was a lot more bearish on Tesla. And then the other side of it is Netflix is increasing pricing, which is kind of gutsy to do. You just blew out earnings. You're going to affect earnings going into the next quarter with the price increases. It's going to be interesting. And then Tesla finally has a delivery date for its Cybertruck. But then everything that I talked about, that Cybertruck ready for pickup, Tesla's Cybertruck, I think that's an ugly vehicle. I've said that from day one. Netflix does not worth this much. Amir, too many people are still, I asked the question yesterday, how many of you, when they raise the prices, how many of you are going to still keep your Netflix? There's a lot of people that were like, yeah, I'm keeping my Netflix. And I'm one of them. Will the Fed cut rate in 2024? Eugene, I don't know. Something, the reason why you cut interest rates is to spur up an economy that's been beaten up. The economy, as you can see, Eugene, is not that beaten up yet. The economy is still stronger than what the Fed likes. I don't know if he cuts in 2024. Anything can happen throughout the whole year. I wouldn't anticipate a cut until maybe late 2024, early 2025. That's my thinking based upon what his goals are, what's going on in the market at the particular point in time. Now, if this war keeps going on longer than anticipated, that could beat up the economies a little bit more. See, there I go guessing again. I gave you as far as I'm willing to comfortably give, Eugene, that I don't think that they cut until late 2024, early 2025. All right, that's my 2 cents, Eugene. That's my 2 cents. You think Tesla's a buy now? No, not yet. I think that after they start selling the Cybertruck or they get the FSD license, the full self-driving licensing, those are the things that are going to push Tesla up higher. Based upon what he said right now, I'm not looking for Tesla to rebound just yet, at least not a long-term rebound. All right. And then Tesla shares sink 9% following earnings report, cautious commentary from Elon Musk. All right. And then I've got interesting equal weighted ETFs deserve a portfolio spot. There's 3 of them in here. I wanted to take a look at them. EQWL, which is companies in the 10 companies in the S&P 500, and interesting on equal weighting. Another one was on the NASDAQ 100, right? Mega cap stocks like Nvidia, Meta. And then the last one was RSPN, looking at 78 industrial sector representatives. Keep in mind the individual stock ratings deviate, blah, 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 blah. I wanted to give the main draw for RSPM is that it offers diversified exposure to a range of industries from aerospace and defense to construction and machinery. So I wanted to take a look at these. As an alternative. You wanted some fish? Possibly these are 3 fish that I'm going to offer to you. Let's get back into the software. There's TSM, they beat earnings. Netflix, they beat earnings. Tesla, they missed earnings. And then we'll look at the other 3 equal weighted ETFs. Let's go take a look at these 3 stocks. 2 of them beat earnings. 1 of them missed earnings. Put this on 3-month graph. This TSM, they beat earnings. A little bit of an indecision going on today. Look at that doji. A lot of selling pressure, but there's the beat. Let's go put earnings on. There's the beat. Didn't fade the gap. I'd keep my eye on it. I do like that the earnings are rising about where they were 3 months ago, but earnings growth is falling. The whole semiconductor space has gotten beaten up, but Taiwan Semi was still able to beat earnings. Netflix beat on subscribers. All right. Long term, not feeling it just quite yet, but I do. And this was one of the things that I felt comfortable with saying that I would have been bullish going into Netflix earnings. Look at the earnings growth and earnings per share. Look at that, and knowing that earnings is the engine that drives the stock's price higher. Even though the stock's price is falling, look at the strong earnings and earnings growth. All right. A little bit of pullback today, but nowhere near fading the gap. All right. I'd keep I like Netflix from that perspective, but you know something? I'd wait for the NPI giving me an entry. I don't see it yet. Glenn, don't be guessing on the economy. Ask only one question. If the U.S. government asks me for a loan, they have to pay me 15% interest rate, and if they have to start paying back their debt. Listen, we all know that we got a lot of debt. We all know that the interest rates are going up. How sustainable is this? And Todd Schaefer and I had a conversation yesterday. He said, when it comes down to this, what do? You just print more money. At some point in time, you're not going to be able to print. Well, you're going to be able to print more money, but it's going to be worthless. And this is the times when we go down the street with a wheelbarrow full of money just to go eat dinner. Do we get to that point because we overprinted the money? Don't know. All right, next stock in here, Tesla. Big earnings, not a big earnings miss, but the reason why I was bearish on Tesla, not only was the downtrend there, but look at the earnings growth and earnings per share. Again, the engine that drives the stock price higher started falling. No trend, no. I still like Tesla long term. I'm just not feeling a downtrend. Something for me, Tesla's got to go through this downtrend. It's got to go up through the downtrend. All right. And here's these equal weighted. Notice that all 3 of these have CIs above 1. These go up more than they go down, and they're all ETFs, right? Interesting about that. So let's go take a look. All right, these are equal weighted ETFs in several different spaces. I don't know how that CI is like that. I don't know well, if you're looking at the 1 year, it is higher than it was 1 year ago. I'm going to go back to the 3 month. Do I like this? This is on the large cap. The answer is no, which makes sense because on the large cap, remember, 80% of the market follows the direction of market. Large cap is going to be affected by that. I'm not feeling this even as an equal weighted ETF, group of stocks in an ETF. Large cap is going to be affected by market's conditions. Another large cap, QQE. I've never heard of any of these ETFs. I've never heard about any of these ETFs, but I saw the story. I want to take a look at it. Glenn, can you give some perspective on earnings versus earnings per share when a stock's price is falling? Earnings per share will rise as price falls, even if earnings are not rising. All right, let me hold on to that. Let me answer that I want to get the full question. All right. And then the last one in this list, man, none of these look anywhere near good. So Amir, any of these is fish? I don't like them. Any of these is fish? I don't like them. All right, let me try to answer this question. So let's go bring up a graph of a stock. Let's go look at, I'm going to look at Apple. Sigh. Let's go look at, we looked at Tesla, AAPL, TSLA, Netflix, NFLX, and TSM. All right, so talk about earnings, perspective on earnings. Now, earnings, a company is going to meet or exceed earnings expectations, earnings per share. Understand that when we're looking at earnings, you're looking at earnings per share here, these are projected earnings per share. So if Apple had an earnings of blah, 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 and you look at our earnings is at 643, that's forecasted 1 year out. So let's start off there, Michael. Our earnings is forecasted 1 year out. We look at past earnings. We look at current earnings. We look at earnings expert people out there to get a perspective. And then we forecast our earnings. And that's why I say when you're looking at the earnings in VectorVest, you're looking at forecasted, but this is the engine that drives the stock's price higher. Knowing that Apple is falling, but earnings is rising, our earnings per share is rising, we know that sometime in the near future, this company has got some good potential because the company's making money. Earnings versus earnings per share when the stock's price is falling. So I see the earnings per share is rising even if the stock's price is falling. It just means that if I look at fundamentally look at RS at 1.36, the company continues to meet or exceed earnings expectations. It just means it's not the right time to buy. So Michael, does that make sense? All right, does that make sense? Let's go do the same analysis. Tesla. Again, long term, I still like them, but man, maybe I need to change that thinking with earnings growth and earnings per share going down, Michael. Does that make sense? Stock's price is going down. The growth and forecasted earnings is falling. Maybe I got to reassess. Maybe I'm caught up in the quagmire of knowing that Elon Musk is an innovator, that Tesla is the big boy in the space, that everybody's chasing them. So maybe that thinking says, long term, they're going to be good. Well, let's go put this on a 6-month graph. Man, let's go put this on a 1-year graph. Man. All right, let me show you something else. Freehand line, I'm looking at a 1-year graph. What is about to happen with Tesla? Ooh, look at that wedge. Look at where today's price is. Wow. Technically, do I still like Tesla long term? Yes, but I know what's helping to push the stock's price lower. What? The price war with China. That hurt them tremendously. It's affecting them. I still think that when they go through full self-driving licensing or when they finally get the Cybertruck off the line and people buying it, I think that's going to start to raise the outlook. But look at this as the last year, ups and downs. Nice run. But since the last high that happened here back in July, Tesla hasn't been able to get out of a downtrend. Bill says, keep the faith on Tesla. I still like the company. But if I'm looking at the analysis that the VectorVest system has given me, I'm just saying, Does that make sense? That I'm just saying, No other tool gives a long-term perspective on earnings and growth like VectorVest. Amazing analysis. So I'm sure that there's a lot of people who are bullish, but maybe I need to change my perspective. I'm not giving up on it. Maybe I just need to wait for a better buying opportunity. Interesting. All right, let's go to the next stock in here, Netflix. I think that the earnings and earnings growth is starting to show its face here. Even on the pullbacks, overall, this stock is still higher than it was a year ago. Yes, it's pulled down. It's got to get out of its own way. But I have the idea of feeling a little bit more warm and fuzzy with both earnings and earnings growth rising. Taiwan Semi. We know that the semiconductor space was primarily driven by AI. AI is not going away, and I think that the semiconductors are going away, but I'm looking at, the earnings growth and the earnings per share. I think that when we get into earnings season, that understanding the question that Michael asked brings this to light. Stocks price is falling, so is earnings and earnings per share and earnings growth. If these are the engine that drives the stock's price higher, well, the engine is starting to fail. Okay, those were the stocks. So, Michael, hopefully that answered your question in regards to analyzing earnings and our earnings per share. Do you have any perspective thoughts on SMCI? My thoughts on SMCI, just like in that same space with Taiwan Semi, put this in a 3-month graph, put it in a 6-month graph, put it in a 1-year graph. SMCI is a lot stronger than TSM over that same time period, right? This SMCI, TSM has pulled off a lot more than SMCI. But what is going on with SMCI? There's the downtrend. Here's a good level of support, right about 235, even a little lower. Notice by way of the MPI, the trend is still there, just barely hanging on. Earnings is rising, but the growth isn't. Wow, that's a lot to go along with what's going on in the chip space. Perspective, I'd wait. Perspective, the stock's price is going down since that high. Only one time has it tried to get up to that level. Earnings is rising, but the growth isn't. The momentum by way of RT is still moving down as well. The stock was overbought. That's a good reason why the stock's price pulled back as well. Long term, relative safety at 1.4, relative value at parameter, capital appreciation, relative value. Let's move that up. Relative safety at 1.44, relative fundamentally sound. SMCI, fundamentally sound. Let's go look at TSM. Relative value, relative safety, fundamentally sound. Both of these stocks are fundamentally sound. But if I'm looking at the two, based on price action, I would prefer to be in SMCI. But I don't know if I really want to be in it right now either, especially with the market's direction. Glenn, you better make up your mind. Do we get out once the stock crosses the support, or do we hold? I'm not going to tell anybody to hold anything going down. If it breaks through a level of support, it should have gotten out of it before it broke through a level of support, especially coming off a high. But once it breaks through your line in the sand, you shouldn't still be in it. So I don't know what you're saying, Lou, about making up my mind. I wouldn't be holding a stock. And this is taking the place of looking at your stocks. This is taking the place right now of looking at your stocks. Dr. C says SME stopped out. Then you should have gotten out of the stock. I still like the stock, but if you hit your stop criteria, you should have gotten out. ISRG, same scenario. But folks, don't misunderstand that these stocks are being affected by the overall market. I do like the earnings growth and earnings per share. I feel a little bit more warm and fuzzy knowing that this stock should have the opportunity to run. Relative value, upside potential is not there. Relative safety is there. Relative value is not there, but relative safety is. Earnings per share is at 6, but in the earnings growth is starting to move. They're both starting to move. Isn't SMCI more into AI than the chips? I'm going to put them in both, Dan. They are in the AM. When I look at SMCI or NVIDIA or AMD, they are heavily in AI. AMD and NVIDIA are heavier into the chips. All right, there you go. Trading SMCI is like holding on to a live electrical wire. Better have a good stop. I don't disagree. Glenn, can you add value to these graphs? Absolutely. Capital appreciation. There's the value. I bet you all of these should be overvalued. Well, ISRG. Let's go look at the other ones. Those are undervalued. SMCI, that gives me another good reason. Taiwan Semi is undervalued, and SMCI. All the three the AI / chip stocks are undervalued, which means that over time they should have the propensity to rise up to value. So they all do have upside. I just think the market's direction is affecting them. I don't like buying anything when the timing on the market is short. I agree with you. All right, give me about 5 more stocks that you want us to look at. About 5 more stocks. All right, this took the place of putting them into a list. I put them onto a graph, so I just switched it up today. 5 more stocks. 5, 4. Oh, here we go. I was about to pack up and go home. 1, CLS. 2, CVE. 3, LABD. 4, and one more, CCJ. All right, let's go peep these out. Put them on the 6-month graph. Overvalued. Oof. As much as we've been talking about oil, I know you may not hear it enough. However, thank you for serving your people with great, excellent service. Thank you for that, Dan. That's all right. Sometimes I don't need to always hear it. Just as long as you guys support the channel, that's all I need. As much as we've been talking about oil and that oil could move, I see the most recent move now jumping to overvalued. I'm getting trend in Exxon. I'm looking at a 1-year graph, though. I don't like the earnings growth and earnings per share. I think that oil and oil stocks will be driven by geopolitical stuff more so than by earnings and earnings growth. Does that make sense? Yes or no? Because that doesn't happen very often. It's not very often that I'm going to say that it's the geopolitical stuff that moves it. I think that oil will move off of the geopolitical stuff more so than the fundamentals. Do you agree with that? Yes or no? Do you agree with that? Yes or no? I think that the war, getting Iran more involved, is definitely going to push oil up. I look at long term, though, earnings and earnings growth ain't. Amir says, I don't get it. Amir, I think that this war and people's fear of what's going to go on with oil is what's pushing oil up now. It ain't the earnings and earnings growth. Geopoliticalosity is a big deal, says John. All right. Does that make sense, Amir? Oil goes up, but oil-related stocks are not. They will. I'm thinking that this is an oil-related stock, you're starting to see the move. Glenn, I know you're very smart, but just as you know, oil stocks and oil physical crude are not correlating. Market is pulling oil stocks down. Okay? And that's why I say I think that even the oil stocks are going to start moving to the upside because of the geopolitical stuff. All right? We'll see. Here's a stock. You want a fish? That's a good-looking fish. Rising earnings and earnings growth. Love the trend. Undervalued. CLS. I wouldn't buy this unless it was moving up. As a matter of fact, I'm going to give you a buy point. It's over $20. I'm going to say put in an order at $27.62, which is 12 cents higher than the high. I like that move. Bottom, do you want a fish? There's a fish. Undervalued and nicely moving up. I'd put in a buy order at $27.62. But understand the market's direction. I'd be a little leery. But if the stock wants to continue moving up, that's where I would put in a buy stop. CVE, here's another petroleum. Moving up enough. Look at that. Bottom left, top right. Moving up enough that it's now overvalued. The trend is there. Geopolitical, because earnings and earnings growth is not moving it. That's not the right mover. And here's another one. I'd be looking at 12 cents higher than the high. 12 cents higher than the high. So I'd be looking at 59.61, 21.61. But again, there's another fish. That's another fish. Good gravy. LABD, the shorts on. I want you to be careful when looking at shorts and looking at contras. Both of them playing the market to the downside. I think that the market still has more downside. I just don't know how much more downside. But here's another fish. LABD is moving. It's moving. The trend is strong. The buy signal is there. Today would have been a good day to buy. I always want you to buy on a day where the stock is moving up. But LABD is definitely moving higher. That's another fish. All right? That's another fish. Jeff says, thank you, VectorVest, for LABD. Killing it. Yes, and Jim is right. It is triple leverage. I'd be super careful because all it takes is one good day to wipe out all of the gains from the last couple of days. All right. I am still of the mindset. I did a video not too long ago that if you buy Contras, I'd look at non-leverage Contra ETFs. Non-leverage. But if this is killing it, just as long as you understand how risky, how volatile that this could be, rock and roll. All right. But if you don't realize how volatile this could be, then I wouldn't touch it. Oil is used to make solar panels. Is it? Is it? I didn't know that. I know oil could be used for plastics. I didn't know that. All right. Why you think solar panels are bad? Glenn, all oil stocks will have great earning results, says Akshay. Listen, I'm of the mindset. I'm still, CCJ, uranium. Ryan just did a uranium video the other night. Was it last night? I think it was last night's video. CCJ is one of the best stocks, if not the best stock in the uranium space. A little bit of convergence on earnings growth and earnings per share. But earnings per share is rising. Earnings growth is about what it was 6 months ago. But look at the trend by way of the MPI. It is grossly overvalued. If I'm looking for a better entry, how about I wait for the RT5 to go above the RT40? But love the play. Hard to sit through right here. Probably would have gotten you stopped out, but look at that. The trend still held by way of the MPI. That's all of the stocks. All right. What do you think of URG? Why you keep asking me about more stocks? Huh? Why are you still asking me about more stocks? I'm biting into Joey's tea time now. ALB, ENPH. All right, that's it. No more. Non-dividend oil plays with good earnings increase. All right. Here's three more stocks. Yes, got stopped out of CCJ in the downturn, but Mark, I'm looking at a better opportunity to get in. Here's another uranium play. I still think CCJ is a better play, but this is leveling out. The trend is still there, rising earnings and earnings growth. And it's cheap. There's another fish for you. All right. I'd actually really would like to buy it once it gets above that high. I'd put in 168, 173. I'd put in a buy order at 173, unless you want to buy it now, but it's moving a little bit sideways. All right. What else is in here? ALB. Yikes. No. I love that it's undervalued, but I got no trend. No. I got nothing good about this at all. Let's put this on a 1 year graph. I got nothing. This is like my Whitney Houston. I got nothing. Furby, you're absolutely right. I think Ryan did a great job on the uranium video last night. Absolutely. There's nothing that tells me I should be in this. Why, Amir? Why are you? I'm not sure what you're looking for before you get into a stock, but even by way of the MPI got you out of this several times. I'm not sure what you're looking at when you go to place an order. But the stock is going, and it hasn't. This is the last year. The stock has been going down for the last year. Interesting how the earnings and earnings growth was rising as the stock's price, and look, it ran. Woo, look at that. But then it started leveling out. And what did the stock's price do? It started falling. It's one of the safe stocks in VectorVest pick. Well, relative safety is falling. I don't know where you saw the safe stock and what happened in this industry. So I don't know the full story, Amir. I don't know the full story. EMPH, a stock that I do like, but man, 1 year, look at the downward. It dropped enough to go from overvalued to undervalued. Look at the earnings growth and earnings per share. I'm getting an early signal. I got a couple of early signals, but no trend has come out of this for almost a year. Just because it's a dividend paying stock doesn't always make it doesn't always make it the safe stock. You're buying the stock for the dividend. I look at the relative safety. It's low, and that was the Albemarle was the relative safety is at 1.07. High safety stocks have relative safeties about 1.2. About 1.2. You were looking at ALB more for a dividend play. And you know something? If I go to the Unisearch, and let's go look for searches retirement, and let's go look at just dividend plays. Where's the relative safeties? Yeah, so that's what I said. You bought it for the dividend. Here's the relative safeties. Does that make sense, Amir? Two different things. Whereas I'm looking for safe stocks, then let's go look at something like that's retirement. Let's go look at conservative. Let's go look at ruler. Where's my ruler stocks? Son of a gun. Is that under prudent? Where's ruler stocks? Let's go look at ruler stocks. See these relative safeties? Those are safe stocks. Does that make sense? These are safe stocks. You bought that other stock out before its dividend. Probably had a safe dividend, but these are safe stocks. Hopefully that makes sense. Hopefully that makes sense. Something tells me that you bought ALB for its dividend, not for its safety. And it might have had a high safety, dividend safety. Let's go to Stock Viewer. I think I want to spend the time to answer this. I know, Joey. I want to spend the time to answer this because look at the safety on it. But let's go look at the dividend safety. Dividend safety is good, but that doesn't stop the stock from going down. You want to look, if I'm looking for high dividend safety in safe stocks, and I want relative safety to be above about 1.5. Michael says ALB has gotten rocked this year. Again, it is undervalued, good upside potential. Safety is above 1. But when I go to look for a stock like ruler stocks, those safeties are going to be totally different. Those are safe stocks. Murphy's in there, pharmaceuticals in there, Decker Outdoor, United Healthcare, Steel Dynamics. And that's running it as of, that's a long time ago. Let's run this. Oh, I remember we were doing something, Joey, weren't we? We were. The relative safeties are still high, but now I'm looking at Celsius, NVIDIA. Even though NVIDIA gotten beat, the safety factor is still there. SMCI, CRM. These are safe stocks, Amir. These are safe stocks. Albi has been reporting good earnings for a long time. Maybe they are investing their gains on the grow. Or maybe the company is not being, could be better run. That's probably a better way of saying it. All right. All right, put me on my last page, Joey. I wanted to talk a lot about what the Fed said today. I did a video not too long ago called, I'm tired of trying to mess with this market. I'm tired of trying to mess with the Fed too. I think the Fed knows what he needs to do, but he's doing what he thinks that he needs to do. And I don't want to be in his seat. How about that? I don't want to be in his seat. And just like I said earlier, will I call the Fed again? Absolutely. I love that we go through and we try to find you fish. I love having the conversations and disagreeing. Akshaya, I love disagreeing with you, but I respect what you have to say. Amir, I like looking at all of the horrible stocks that you're in and try to help you to make a better decision. It is what it is. It is what it is. What's better? 2 times the shares SMCI or 1 NVIDIA? I don't know. I don't know. I like SMCI. I don't know. I don't want to answer that because I don't always know. I don't know. All right. So, and Nat says entertaining. So, I mean, there's people who are not on board with the things that I do, and I'm okay with that. As much as I'd love to join, watch this channel grow, I think that I've put too much time into me being me to change for one or two people. All right, that's all I got to say about that. That's all I got to say about that. Jazz says, Glenn, might as well going to keep instead of playing golf, but by the looks of it, it's raining and the bats are flying around. I hear you. Akshaya says, you're spot on. We are bouncing. If it wasn't for the Israeli war, we should be going up. The bad things keep happening. I know, Akshaya. It is what it is. Excellent analysis today, Glenn. Thank you, Uncle Glenn. You guys got it. Jake says, thank you from Canada. VectorVest helps me decide if a vertical spread is safe or workable. Thanks. You're welcome. Glenn, you're doing fine. I really appreciate your time for all you do. And Mark says, great job. All right, with that, I got to go. Because Joey, I gotta record a video for tomorrow. I gotta write an article, and I gotta do my music bingo tonight. I got so much stuff to do. Joey, you wanna switch lives with me?
Yours is so easy, bro.
Wow. This is why me and Joey fight. This is just why me and Joey fight a lot. All right, with that, folks, I gotta go. Make sure you check out Ryan's video tonight. Thank you for being here for Trending Thursday today. I've got a live stream tomorrow on the mobile. Man, a lot of stuff going on. So make sure you do everything you can do to support the channel. Invite people to come as well. If you're brand new to the channel and you haven't hit the subscribe button, do that. If you haven't hit the like button yet, please do that. We try to get 100 likes before we leave. So we'll see. All right, with that, folks, I need a theme song while we wait. All right. Adios, arrivederci, ciao, au revoir, sayonara, aloha to all my people in Maui. Bon dia, salam shalom. Shalom shalom. Namaste, and yasu. That's my new theme song. See you, folks.